Everybody, this is Jim at SP500chart.com. It is after the close on the last day of February 2013. That means it's February 28th. If you don't believe me, line up your knuckles and do the little January, February, etc. This is not a leap year. So this is it for February. And we end really a really interesting first 2 months of 2013. We're going to take a look at that. But first, let me read to you that the website and the video are for educational purposes only. Nothing stated at the site or in the video is intended to be used as investment advice. I control lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I'm not a licensed financial professional. I'm just a guy who draws lines on charts. Let's take a look. Before we take a look, I need to issue a warning. I'm probably going to talk a little bit about not really politics, but about news and about events. And the first thing I'm going to say right off the bat, we spent most of the day in positive territory. And we did so on a day when the last quarter's GDP numbers were released, showing the U.S. economy growing at a 0.1% annual rate. That, folks, is that's a flat line. And that's not good, because if we are growing at a GDP of 0.1%, that cannot create jobs. That cannot create wealth. And I don't. What's a good way to put this? It's human nature for people to be jealous of those who have wealth. It's human nature for them to want to get something. It's also human nature for people who do not have wealth to want to defend their position by demonizing those who do have wealth, and by making excuses and becoming a victim for why they don't. And I don't know which category you fall into. I'm hoping all of you are on your on your way to creating wealth. But I can guarantee you that no one ever got wealthy by blaming other people for their lack of success. So if you find yourself feeling like you're on the losing end of the financial game, be it in the markets, be it in the workplace, be it in what you do, I would encourage you, take responsibility for your actions, take responsibility for your life, take responsibility for take ownership of where you are right now, and say to yourself, now, this is where I am today. How can I make things better? Okay, I'm off my soapbox. But the fact is, it was just amazing to me that we wake up to the news that the GDP has gone nowhere. And for much of the day, the markets are in positive territory. And that just brings home the thing that I've harped on in the past, and that is the markets and the economy are not joined at the hip. Okay? You can have a horrible economy and have a great market. Just look at what we've had over the past 4 years. The past 4 years have been the single most lackluster 4 years in job growth since the Great Depression. Yet look what the market has done. Okay? And then you look at what the market might do when we finally start actually creating jobs. There's a good chance it may go down. So don't try to trade on economics. Trade on the chart. And with that said, thank you for your ear. I know you didn't come here to hear that. I said it anyway. We had this downward channel here on the 5-minute chart that reversed on the 26th, started to head back up. Looked like it was going to head south, guys. Looked like it was ready to turn down today. Right at probably about 10 o'clock or so, whenever that was, when this lower line broke. But instead, we kind of wandered back up, got back up to that brown line, and it's hard to draw that line exactly right. Maybe it's here, maybe it's there, because the genesis of that line goes back quite a ways to some tops in the market, the tops of 2010. The S&P got over this line for a bit in 2011. Then we had the last two tops, both of which occurred in 2012. So if we put that line about as close as we can get to these different areas, there you have it. We end up with this line that ends up being very, very close to where we turned down today. Now, I had been considering that we may have a head and shoulders top that we are forming here. Yesterday I mentioned that with that amazing strength coming back into this range, getting back over this potential neckline, and then powering up to test the what had been what I would call right shoulder levels. There's another potential here, and I want to point them both out to you again. To begin with, we're still this head and shoulders top is still a distinct possibility, but we won't know until we come down and we take out this neckline by a technically significant margin that I would consider to be at least 1%. Here's the deal too. If that move is put off for a number of days and we do get that 1% takedown of this neckline, then out of necessity we will also take out this yellow support line that is pretty much defined the last two what I would consider important intermediate lows back in mid-November and then back at the end of 2012 in late December. So what I'm saying is that it looks like we were in this channel that was pretty skinny, but occasionally there would be some panic selling that would take us down to this line here. If we get that again and then take that out, then to my eye it looks like not only are we reversing this little red channel right here, which we've already gotten out of it, but we would be reversing the larger channel, and it just looks to me like the likely outcome of that would be to get down into the low 1400s or at least the 1420s. Now, faced with what we saw today, this just kind of bizarre rally in the face of what should have been perceived as pitiful economic news, we have to consider that maybe the market's got something else in mind. We're going to scratch this line because we got over that and then under it, and it didn't seem to really do much. Okay, so I'm going to go with another trend line that I'm going to put on here as a potential important line, and it's right here, a nearly horizontal line at about the 1525 mark. And this line is put here for what should be pretty obvious reasons, and that is if we broke this red channel only to consolidate, to make a continuation pattern, then this line could be the neckline of an inverted head and shoulders pattern, which now becomes a little bit more clear with, I think, famous last words, with what we saw happen today. So it looks like this is a fairly strong reversal today, up around 1525. As a matter of fact, if we go to a daily chart and zoom in just a little bit, if I can, hold on just a second. Okay, there we go. Fixed it up for you. If we zoom in on this chart and we look at the last 6 months or so of trading, we will see maybe 3 examples of the candlestick that we got today. And I'm not big on candles, but when you get one of these, when you excuse me, when you get one of these shooting stars, it's a fairly decent indication that you're setting up a day or two of selling. If we look back in the chart, if we see one that really looks as close to this, we have one back on Friday, September 21st. We have one, and that's set up 3 days of selling. We had one on October 5th, set up 3 days of selling. And we really, we almost had one back on August 14th, but it really did not pan out, and that's why you need confirmation on these things. Let me see, we had, we had one on December 12th, set up 2 days of selling. So this is a pretty weak, simple indicator, but what I would do, there you can kind of see the nuts and bolts of it. And what I would do is, going into tomorrow, see if what happens with follow-through selling as it relates to that 1515 line, because we still have some technically important lines operating here. And I think this 1515 line is still important. You could see we got over it and then we bounced around it for a while, rallied up to 1525. Now we've quickly fell today into negative territory, but did not take out this 1515 line. But what I want you to see, though, that I think could be more important is downward channel, upward channel. So I would sort of at this point expect a downward channel. And if we do, then 1515, 1498, these are still important lines to keep your eyes on. So I took the opportunity today on this rally to get out of some of my long positions. Sadly, some of them were down at that point. But, you know, I looked at it and I said, well, if we start heading south, I don't think they're going to go up. So I went ahead and I'm now about 88% cash. So let's see what happens, guys. I got my short position as a hedge against those few long positions that survived the cut. Hey guys, thanks for watching the video. Thanks for putting up with my diatribe there at the beginning. But just the thing I want you to remember is try to divorce the news cycle and economic, quote, reality from the markets, because they don't always line up. And those who try to make a correlation between them and trade on the economy have a tendency to be continually on the wrong side of the trade. So, I mean, in the long run, yeah, economics are going to win out. But when we're talking about trading the markets as they fluctuate on a monthly and yearly and daily cycle, it doesn't seem to line up that well. So look, guys, thanks for watching. Take care.